welcome to Cigars and Syndication, where we're passionate about cigars and real estate. I'm Robbie Rogers. I'm here with Jay Noor, and we're here to talk about BTR, Build to Rent. We're smoking H. Upman today. So far, starting off pretty peppery, and seems like it's going to be a solid smoke.
Hey everybody, I'm Junaid Noor. Welcome to Cigars and Syndications. This is the first time I'm having this. I have not been a big fan of H. Upman unless it's a Cuban. Not that I smoke Cubans inside the United States because that wouldn't be allowed. But this is a pretty good cigar. I get the pepper, black pepper. I get a little hint of floral as well. Are you getting some floral?
Yeah, I'm getting a little bit of the floral, definitely a peppery spice. It's a little unique in its composition. It's a Brazilian wrapper with a Nicaraguan binder and filler. I'm not familiar with the Brazilian wrappers, and it's got a pretty unique, distinct flavor. I like it. It's so far a good smoke.
Yeah, I'm not very familiar with the Brazilian wrapper either. It is very distinct, yes. So, build to rent. What do we know about build to rent, and why is this so important nowadays?
I'm not sure what got that kicked into gear. I don't know if the Airbnbs and stuff kind of initiated some of these communities, but the build to rent is relatively new out there, and it's investors and developers getting together and building communities that are entirely for rent.
So basically, build to rent, for those of you who don't know, is a subdivision of standalone single family houses or duplexes, but the entire subdivision is rental. It's no one buys it. The investor and the developer, or the investor and their investment group, own the entire subdivision. So it could be a small build to rent community, 20 houses, 50 houses, or it could be a large one where a lot of the institutional buyers are buying those 200 and 300 unit. So basically a whole subdivision.
Right. It's really interesting, and it's got a lot of levels of entry. Like you said, there's some of these communities have 20 houses in them. Some of them have 200 or 300 or 400 houses, and it allows investors at all levels to participate.
So for me, for someone like me, I would love it because I used to have a lot of single family homes for rent, and they were spread all across Houston. If anybody knows how large Houston is, Houston is about 650 square miles. So to go from one house to another house in any given day was not an easy task. If one tenant calls you and another tenant calls you, it wasn't easy. And then not just for tenant problems, but you want to go and visit the houses, right? You want to make sure that the upkeep is good. Here in a built to rent community, it's awesome because you can have, 50 houses or 100 houses within one area. And so it's kind of like a multifamily apartment complex without the sharing of the walls and the height. It's just a lot of single family homes.
Yeah, I think it kind of hits a market that maybe a family is wanting a single family home and they just don't have enough down payment, or they're trying to get their credit right, but yet they make enough income that they can afford a home, and maybe they're just trying to get everything in line so they can actually buy their own home. And so you probably spend a little bit more money on a BTR than you would an apartment in some cases, but it allows them to have a small yard, to have a little more privacy. And so far, I think they've been fairly successful, at least in the Houston area.
And from an investment perspective, BTRs are generating good returns. Again, it comes back down to how much you're paying for the land and how much you're paying for the construction costs. But normally, those construction costs are not the construction is not very high end. They'll usually do a lower to medium product. They'll do duplexes where they share a wall if the land is a little bit more expensive. But you're right. The renters get a good product with a garage and a backyard, sometimes a front yard, if not a backyard, but some movement for kids to be able to be outside. And it's not so enclosed and so tight as a multifamily apartment building.
Yeah, I mean, I think the one thing is just the density of population. And in some cases, you're going to get into multifamily your typical apartment units and have 300 units in a fairly small square footage. This is a little bit more spread out, not as densified. So some of the challenges may be buying the property right. And like you said, it's your product and how much you spend on the final product to offer these homes, these single family homes at a rental price.
Yeah. The things to look out for though with a BTR investment is to make sure that the general partner or the developer who is putting the project together understands how to operate a BTR community versus a regular apartment complex. So, these are single family homes. The investor or the owner is still responsible for the maintenance on the homes. Um, they're still responsible for all the common area maintenance. In some cases, they may be responsible for making sure the lawns are maintained, just like they would in an apartment complex, where in an apartment complex they would, do all the maintenance for all the landscaping. So those are kinds of things that when the investors are looking at them, they need to make sure that the developer or the general partner knows what they're getting themselves into, because it's kind of like an apartment complex, but not completely. There are some nuances that they need to be aware of.
Yeah, no, I've seen some variations in how they're put together. And like you were talking about, a lot of times the maintenance, all the yard maintenance is included. And so there's some unique benefits to renters on BTR. And I've also started to see some of the 55 plus, the senior living BTRs pop up, and they offer some pretty unique features that are attractive for 55 and up.
Yeah, no, I'm glad you started talking about that. But that 55 and up BTRs are very interesting in that basically what it is, it's a community of seniors living together, and there are no special licenses required. There's no as they're required in some of the other, like memory care and things like that. You don't need medical doctors or nurses. It's just a group of seniors living together, and then what the BTR community does as a whole is that they have events for them, and they have things for them to do, and socials and things like that that they set up. And those are very good money makers. They do good returns.
No, I think the BTR's here to stay, and I think they'll even get more clever and really put some interesting things together. I'm excited to see the BTR future here in Houston.
Yeah. Now, also, the BTRs work very well. Again, it's economies of scale, right? So if you're going to do 20 units, you might not get the economies of scale that you would in 200 units. But BTRs also work in a place like Texas, where we have a lot of land, right? You try to put a BTR in Chicago or in New York, it's got to be on the outskirts. It can't be. There's just not enough land, so they have to build up, and they have to build the apartment buildings up.
And one of the benefits, and I was talking to a gentleman that had put a BTR together and community together, and the flexibility for the owners, where they could actually sell off a home, sell off 5 homes if they needed capital, and or just keep it and enjoy that cash flow. So there is some unique flexibility with BTR versus a larger multifamily apartment complex.
Yeah, and but the due diligence has to be the same from the investor's perspective. Make sure that your general partner knows what they're doing. Make sure they understand their construction costs and their rental costs, the expenses that are associated. Make sure, and this is a very important thing, make sure that your general partner, the forecasting they do, is not showing a 10 or 12% increase every year in rent. I don't know if you know this, but a lot of the multifamily uh, projects that were purchased within the last couple of years forecasted rental growth at 14% and 12% every year. Now we know it happened 3 years back, for 3 years in a row, but that's not sustainable every year.
No, you have to be conservative, and it's no one has a crystal ball. No one can see that. People that are doing these projects are trying to be aggressive in getting money, and when they put their underwriting together, of course it looks fantastic. However, when that doesn't happen, things can come unravel pretty quickly. And I was just reading an article that was specific to the Houston market, and it went out and projected rental growth for the next 3 years. And on average, it was around 3.2, 3.3% for the next 3 years for the Houston area.
Yeah, and 3% is about right. That's usually what we underwrite. But you heard about the foreclosures that Arbor Capital did from New York. They did on the multifamily portfolio of three properties in Houston, and one of the reasons was because they had very aggressive rental growth, and the second reason was that they had a variable interest rate loan without any rate caps on the loan. So as the interest rates went up, the rents didn't go up as they projected because they were not going to go up by 13-14% every year. And so they were in a deficit, and they wound up having to foreclose.
Yeah, and somebody probably made a really good deal for themselves at somebody else's detriment. And I think that's probably going to be seen again and again throughout the end of 2023. Hopefully, hopefully everybody's protected and got their caps and everything's in order and underwrote their projects conservatively and they don't get caught in that trap.
Yeah. And, for our audience, if you don't know what a rental cap is, send us a message and we'll explain it to you. Or we'll cover it in a different podcast. But it gets a little bit more technical, and, these are all derivatives. These are all derivatives like rental caps and credit default swaps and things like that. But anyway, going back to the BTR, do you think that in Texas we're going to see a lot more BTR development versus a regular multifamily?
I do. I don't know that it'll ever get to that point where they're as large as the multifamily apartment complex units. But I think there's definitely a market here in Texas. It goes back to what you were saying. We have the land to support it at the right price. When the land gets too expensive because it's less dense, I think it becomes more challenging to make the BTRs work.
So anyway, back to this cigar. I'm enjoying this cigar. It is a little bit milder. It's not a full body. I would say it's a medium body. It's becoming a lot smoother. The black pepper is gone, but I do get a little bit more floral now.
Yeah, it's definitely the pepper's going away. It's getting kind of creamy, and for me, just a little woodsy, maybe a little floral, but definitely on the milder side. Definitely medium. I agree with that. Good, strong, good flavors. I'm enjoying it so far.
I am too. Although I'm getting a little bit of bitterness on the sides over here. I think that's that Brazilian wrapper.
It could be. I've gotten that in the back of my throat as well. A little bit of just a little bitter, something that a little bit of the aftertaste. But other than that, pretty enjoyable smoke. Back to BTR. There's a lot of factors that have kind of created this environment for BTR to be successful or get started. And one of those is probably just the lack of housing available.
Yeah, almost all cities right now have a shortage of housing. And, if you have kids, families who have kids and they don't want to live in apartment buildings, BTR makes a lot of sense. Even for families that don't have the down payment or, their money's tied up in investments and they don't want to put a big chunk of cash down to purchase a house. BTR makes a lot of sense. They get the house, for their family to be able to live in. Lots of them are nice size homes, but they don't have the density as apartment complexes do. And this is one of the reasons that BTR, I believe, is doing well in Houston is because big shortage of homes.
Yeah, I think there's a lot of necessity for the BTR communities. I really do. I think there's a lot of young families out there, and there's a lot of people that really like the apartment lifestyle. They like the urban lifestyle, but the flip side of that. There's a lot of people that don't, and they want the single family home, the American dream, and the sooner they get started, the happier they are.
And in addition to liking the lifestyle, also the maintenance, right? In your house, you have to maintain the house. You have to do all the repairs. You have to cut the lawn. You have to, pay property taxes and HOA dues and things like that. In a BTR, you're living in a house, kind of the best of both worlds, right? You're living in a house, but you have a problem, you call up your maintenance guys.
No, I totally agree with that. It is definitely the best of both worlds in some cases.
So just to wrap it up, in case people who don't know what a BTR is, we spoke about built to rent properties, which are basically single family homes or duplexes, but in a rental community. And, go Google it, go look it up, and you'll get some more information on BTR. Also, check out our website, www.albanyparkcapital.com. Hit the resources tab. We have a lot of information there. We have a lot of articles to help you understand all different aspects of real estate investing.
I say don't be afraid of a BTR opportunity, and I look forward to seeing y'all next time. Thank you.